Did you know that there are up to 6 ways that you could retire and not have to file a tax return? 6 ways. Now let me briefly go over them. If all of my money, for example, was in a Roth IRA, I have to put it on a tax return, but I may not owe a dime. Now the others are, I don't have to put on a tax return. So of the 6, this one says I still have to file a tax return, but very little tax would be due on the money that's coming out of that Roth IRA. Let's talk about the other 5. There are 5 ways that I could use collateral, money that I've already paid taxes on, and I put it somewhere, whether it's in my home, whether it's in my business, whether it's in investments, whether it's in cash value. Let's go over each one, and I'll give you an example of each one. The first one is what Warren Buffett is doing. Warren Buffett is a multi-billionaire, and he has a huge portfolio. But he could go to the Bank of America, Merrill Lynch, and say, look, I want to pledge you $100 million of assets in my investments into your bank. Give me a check for $50 million. It's called a margin. He owes nothing on that. Now he does owe the interest, the margin interest on that money. That interest is going to be payable to the broker-dealer, but he's got dividends in his portfolio that can pay that for him. He is in a lower tax bracket than his secretary. Number 1, margin account. Number 2, reverse mortgage. 25 years ago, reverse mortgages were horrible. They weren't regulated. They were very harmful to elderly. It was truly expensive to get into one. Well, today, now that they're regulated, they're a lot better than they were. And someone would be able to stay in their home and either stop making mortgage payments or take a check. Now, there's some rules and regulations. You have to be a certain age, you have to have a certain amount of equity. All of those things still come into play, but the money that comes out of that concept is free of income taxation. Here's the third, a business asset. Let's assume I own an office building. Free and clear. It's been depreciated, free and clear. I don't want to sell it. I'd have to recapture all the depreciation and I'd have to pay a capital gain tax. What if I borrowed against it? Got a $1 million building, I want to borrow 300 grand. Now here's the difference with this one. You're going to borrow 300 grand from another financial intermediary who will charge you interest. And they'll give you something called a coupon book. And every 30 days, they're going to want to hear from you. But the cash advance of the principal to you, free of income taxation, regardless of what you paid for that building. I bought it for 100, it's worth $1 million. I borrowed 300,000. I don't owe income taxes on the 200,000 of profit. I will pay it back. Number 4, primary mortgage. This is not very popular because if you think about it, you spent 30 years living in this house and you've paid it off. You want to go get another mortgage? But if I did, again, the same rules apply. Doesn't matter what I paid for it when I bought it. The money that I would borrow would be free of income taxation. However, I also would have a coupon book, I'd have a credit reporting agency that I would be responsible to, and I would owe it back on a monthly basis. And here's the one I like the most. Everybody knows this, cash value life insurance. But of the 5 ways of using collateral, it is the only one of the 5 where the lender, the insurance company, guarantees the growth of the asset they've held as collateral if you're using whole life. This is one of the reasons why our group does not use IUL or any UL platform for that matter. The head cannot be eating the tail and still have a distribution effect that would benefit the client. I have not found that in my 50 years. If there's others that have found a way to do that, would love to hear from you. Now remember 6 ways that you could retire and not file tax returns on those distributions: a Roth IRA, a margin account, a private IRA, a reverse mortgage, a commercial loan, a personal loan on a mortgage, and then cash value life insurance. I sure hope this helps. If you want to learn more about how wealth works, be sure to subscribe to our YouTube channel and like our Facebook page, Tom Love, How Wealth Really Works.